Let's get more on all this from an investment perspective. Mikio Kumada is global strategist at LGT Capital Management. He joins us now live from Singapore. Mikio, hello. Thanks for joining us today. Do you agree with Mohammed Al-Erian there, PIMCO's CEO, co-CEO? I mean, he says that adding more oil onto the market via the IEA adds to uncertainty. I mean, is he right?
Well, in a way, of course, whenever you have an unexpected player, especially a non-market player, I guess the market is understandably annoyed or surprised, so that leads to some volatility and uncertainty. So in that sense, he's right. However, these things happen, and I tend to view it as a knee-jerk reaction. Oil, at the end of the day, is rising, or like any commodity, only if there is sufficient industrial demand, if the economy is improving, and there's a little bit of speculation too supporting it. And as long as that scenario is in place, commodities will go higher over time, and the rest is just volatility or digestive phases in the market. We'll get over them.
Within the commodity spectrum, I mean, your preference is gold. Just tell us why.
Yeah. Well, because gold is least linked to the current concerns which are related to the economy. So, with metals and oil, you can always make a bearish case, and a lot of people do it these days. Again, you also have the, crisis-type scenarios with Greece, and maybe something goes wrong in China. Gold is least affected by these things, so that's why we like gold, I would say.
What about equities, Mikio? Because you do also like equities, but as we know, we're on a run of almost 2 months of losses right across the world. Why should we still, amidst all these troubles, have faith in equities?
Well, because equities are, in a sense, real assets because they give you a share in corporate profits, and corporate profits actually are doing quite well. Dividends are still on the rise, and also profitability is actually increasing. Yes, the past 2 months haven't been terribly good, but the bigger picture is that we are still in an upswing cycle. We are still in a bull market, so over time this will re-emerge. This will rematerialize in equity in price performance. Meanwhile, it's good to remain invested because it's just a good real asset to own. Real in quotation marks.
But Mikio, does Greece and the ramifications of whatever happens next, does that have the potential to, send equities once again maybe into a bear market?
Well, the potential is there, of course. You can never exclude a worst-case scenario, but that's not our worst-case scenario for the time being, at least. And personally, I don't think it will become our worst-case scenario either.
Mikio, thanks for joining us. Mikio Kumada, their global strategist at LGT Capital Management in Singapore.